It's tense right now, ladies and gents, because literally the main thing that I was warning you guys about potentially happening in the last video has happened, which is that this has potentially turned into a bit of a swing failure pattern, a bit of a deviation, whatever you want to call it, where essentially we were trading within quite a nice little range right here. We got a breakout that was fairly sustained over a period of, I mean, a good amount of hours, right? If we take a look at how long we stayed above on the rally up, and, you know, just how long we stayed above overall, it was like a day that we were able to, you know, stay above this, you know, high of the range that we were kind of finding resistance in for about 7 days. But bam, we are now right back in that range, which kind of means that this was a rejection. And what's really scary about this, what I'm going to be talking to you about throughout the rest of this video, is that this is probably the most typical thing that Bitcoin does before it sets new lows, to be quite honest with you guys. And I don't necessarily think that that's what's going to happen, but I'd be a fool, and so would you, if I ignored the signs that are on this chart right now. And that's what we're going to be going through, because look, this might scare you guys, this might be upsetting and stuff like that, but if you are a wolf and you're willing to, you know, really grab situations like this by the balls and crush it, then actually this kind of thing represents a really nice opportunity to make some money. So that's what I want to go over with you in today's video. In the last video, I was talking to you about how, you know, roughly around here would make sense, you know, for me to potentially start entering a short position. I didn't end up taking it. I wasn't too keen on that kind of position, but it did actually work out really well. I mean, just kind of from around the high down to where we are right now, it's, you know, it's been about a 4% drop, and I mentioned that, you know, I would be very comfortable trading that on 5x leverage. To be honest, even 10x, because the stop loss that I mentioned about 2% up, you know, left a lot of headroom, you know, so even 10x would have been fine, but, you know, that kind of gain, it would have been about, you know, 22.5% profit by now, if I ended up taking that trade. I know that some of you guys did actually trade something similar, so shout out to those of you that did make some gains trading this little drop. To be honest, it was kind of obvious, and that's why I spent so much, probably the longest period in that video was dedicated just to talking about this, the risk of this kind of drop, because it's super typical, you know, and I did also mention to you that you've got a beautiful opportunity to trade this stuff on Bybit with bonuses of up to 30k when you head on over to the rewards hub. So definitely check that out if you haven't done so already. These are huge bonuses. All you have to do is sign up and make your deposit and start trading, and you are going to get huge cash bonuses deposited into your account, and you can trade with that money. It's basically like demo money. You can do whatever you like with it, but the catch is that if you make money, you can withdraw it, and if you don't make money, it was like demo money to begin with, so it doesn't really matter. Here's the thing though, we have this area of support down here, and I'm actually going to draw this with a box right now. This is probably the most important box in this short-term chart right now, and I really hope that we do not lose it, because if we do, you know, you've seen the title of this video, you know, I will be pretty bearish. I will definitely lose some confidence in the trend, at least for the short term, right? I mean, midterm, I showed you guys that actually we could drop all the way down to this green line here, because this is actually the 618 retracement of our whole rally. Let's take a look at this again, you know, before I talk about the very short term stuff. So I actually drew a Fibonacci retracement from here up to our high and showed you guys that, what the hell? Okay, maybe I drew this wrong just now. Maybe I drew it from here. I don't know how I drew it actually. That's very confusing. I guess I drew it from here. That would have made more sense. I don't know. Go back and watch my previous video. This is the correct way to draw the Fibonacci retracement, because it's from the trend low up to our recent high. So that would make sense if that's how I draw it. But for some reason, I remember that I drew it from here. In any case, this is the correct place to draw it down to, at least, you know, the way I do analysis, and that puts our 618 retracement down here. And if you've been paying attention to Bitcoin and its Fibonacci retracements, 618 retracements are Bitcoin's favorite throughout history. It generally tends to come down there with a very high success rate. And if it doesn't go down to the 618 retracement, it goes down to the 382 usually, and that is our, it's basically a mirror. 1 takeaway 0.618 equals 0.382. So we cover this kind of thing inside of the Fourth Slides Academy course. You can gain access by, bam, following these steps on screen right here. But ultimately, what this means is that, you know, I think Bitcoin can come all the way down here and still be completely fine. And I'm going to talk about that later on in the video. But for now, we are looking at potentially losing our market structure. And that is what's concerning. See, when I talk about market structure, what I'm really just looking at is, you know, the lows that we're setting compared to the highs that we're setting, right? So if overall our lows are getting higher, and it's so hard to draw because this trend has been so aggressive, but if overall our lows are getting higher and our highs are getting higher, then we're actually going to be in a really good position. We're going to be in a position to continue to trend up. And because of what's going on here, if we do end up dropping down a little bit, we could find ourselves in a position where we start breaking that market structure and no longer setting higher lows. And that gets concerning for the short-term trend, because as you guys will know by now, hopefully, the way this goes is that, first the short-term trend flips, then the mid-term trend flips, and then the daily trend flips. But the catch there is that the short-term trend is going to flip a lot. The mid-term trend is going to flip a fair few times. The long-term trend is what generally doesn't flip very much. And so if you get caught up looking at the short-term time frames, you're going to constantly be flip-flopping and changing your biases, which could get you in some trouble because the overall trend might be showing you something different. And that's a really important thing to be keeping in mind at a time like this, because if we do lose levels like this, I do think we can drop very hard. But that doesn't mean that if we zoom out, we're actually in trouble, because we are still overall in a really good position. Again, even if we come all the way down here, I want to show you, before I even continue with the short-term analysis, just how common Bitcoin actually, within its uptrends, was able to find support at 618 retracement levels. It's actually kind of freaky how reliable it is. I'm just going to draw a few here just off memory, and you can take a look at this. So this one actually, it didn't work out, but the next one, bam, right here, take a look at this. Look at how perfectly we fall down to that 618 level. It's actually really hard to show you because the price was so volatile, but you can see really, really nicely falling down to that 0.618 retracement level, more or less. Very, very accurate indeed. Again, if we, it's a very, very common theme. If we draw it from this low that we set right here up to this high, actually 0.5 right here, so didn't quite hit it on this occasion. To be honest, I can't remember where all of them are, but there are so many. It's actually the majority. I don't want to waste too much more time on this, but definitely go back and check this. I'm gonna struggle to find it now. Hang on, let's see if this one is. This one kind of looks like it. Yeah, I think I already showed this one. I'm not quite sure actually. There are a lot though. There are definitely a lot. So go back and check that in your own time. Bitcoin loves these Fibonacci retracements at 618. I feel like I've just massively fucked up live on video here, but fuck it, we're rolling with it. Because if you backtest this, you'll see. Because I've been using this tool for many, many years, and the 618 has been by far the most reliable level. Pretty much anyone that uses Fibonacci will tell you the same thing. So you go check it out. I can't be bothered. The key point is that we'd be in a really good place if Bitcoin does fall down here anyway. It would still be a nice kind of reset for the trend, but it would also mean within our short-term trend that we do see, some blood. And here's the thing, right, is that this level was kind of holding Bitcoin as support, and we kind of quickly rallied up right here, and that wasn't really a surprise. If I drop a line right around here, this was basically the FTX high, and we look at this level stretched out compared to our box right here, it's pretty clear that the market has moved fairly quickly between these two ranges right here. Take a look at this. Let me make this a little bit easier to see if I stretch this box out further. The market, when it kind of breaches this green line, has had a pretty easy time rising up to the green box, and vice versa, coming down when it finds resistance at this line, or when it plunges below this line, it finds this box even, it finds it very easy to drop down to the next green line right here. So we can see that here, very quick zip up, very quick zip down, very quick zip up, very, very common. Yes, there are fake outs, but generally it's pretty clear that this is an area where, basically, to put it simply, this is what I would call a low liquidity zone. And so generally what the price likes to do in these areas is very quickly zip up and vice versa on the way back down. And that's what's potentially concerning, but it's not actually that bad, because one of the key things I've been talking to you about is this fear and greed index. And if we go ahead and take a look at this and let it update right here, we did get an updated reading of 61. So we're quite firmly in greedy territory now. If we start pushing up towards 70 and 80, we're going to be in extreme greed, where last month we were in extreme fear. This is really important. We have been ticking up steadily over these last weeks, and we need a reset sometimes, especially in whether we're in a bull market or a bear market. We need a bit of a reset. We are going to see this drop down now. I mean, the sentiment was very, very excited previously when we were in a situation where the market was rallying up very, very high, but we still we need these pullbacks in sentiment. We need these pullbacks with long and short ratios as well. This is also something that I've been watching quite keenly, and we've actually seen a really good development here. We've seen a huge swing where previously it was like a ratio of 1.2 in terms of 1.2 longs for every short trade, but now we're seeing something more or less the opposite. If we switch this back onto the 24-hour time frame right here, look at this. We've got 0.85 longs for every one short position right here. Very, very good ratio here for retail, in terms of showing us that retail are kind of scared of what's going on right now, and this might actually be enough. And that's the thing that I want to talk to you guys a little bit about today, because what we've had right here as far as a kind of market reversal could have been enough. If it's not, then yeah, we could be looking at dropping down. And again, this isn't a bad thing, right? I mean, as a trader, we've still got really nice gaps here. Look, bam, here's another 5% gap. 5x leverage, for example, you're already looking at a 25% profit. Really, really good gains. If you're able to kind of compound gains like this, I always make this point, but I'm going to make it again right now because I can't talk about this enough. If you're pulling, 25% profits a couple times in a row, let's say you get it 3 times in a row, you've nearly doubled your money. And that doesn't matter what starting balance you have. Let's go with, $4,000. You've nearly doubled your money. It's quite amazing how well this math works. And that's something which I think is really, very much worth keeping in mind, because everyone's kind of thinking like, shit, how do I double my money? How do I get a 10x on my money? And they're looking for, crazy fucking rocket science solutions to stuff. But, the takes you're getting on this YouTube channel, and you'll know this if you've been subscribed for a little while, is that it's actually the simple stuff, simple analysis, the simple forms of trading that are very reproducible, that are quite easy to continue to produce, where they're sustainable, they don't fuck your mindset up, where you can do it day in, week in, a month in, a month out, and still keep your money as well, because a lot of people, they might, if they're successful, most people won't be successful anyway, but if they're successful, they'll have hockey stick growth like this, and hockey stick drops as well in the very same way, because they're just being stupid, basically. But keeping it simple, that actually tends to work out really well. So really, really nice gaps here. Of course, around here would be the 382 level, as I mentioned to you earlier. But if we do drop lower, we're still looking at really big ranges in terms of volatility. Definitely things that could spell some really nice opportunities for the market. And that is really quite exciting. I guess the only problem is kind of what I showed you yesterday, right? If you remember the bars pattern tool that I used to actually show you what happened right here, honestly, I think it's quite possible that we see something like this happening now. We've actually already got the start of it, guys. You can't make this up. I was literally talking about this yesterday. Just go back and watch that video. Guys, smash up the fucking likes if you appreciate this on-point analysis. I mean, again, we're just looking at the characteristics of Bitcoin. I'm not throwing all sorts of crazy, weird fringe indicators on the chart, and trying to convince you of weird shit. I'm just looking at what Bitcoin usually does and just kind of talking to you about, hey, traders get screwed. This is normal. Traders, when we see too many longs piling into the market, especially from retail, they tend to get screwed. When we see sentiment pumping up a little bit too high, maybe even a little bit too quickly within a bear market, traders tend to get screwed, right? I'm not talking about anything that's particularly complex or difficult to digest, but it's already started to happen. And I suppose the real problem with this is, if I actually take this bars tool from here, but play it all the way down to this crash right here, the real concern is that we end up forming something like this, perhaps even faster potentially, but it doesn't really matter how long the time frame is. It's just that the real concern is that we've set our high now, and we could be looking at rallying down even further. If we did something like this again, it still wouldn't be the end of the world. It would only mean that across a longer term time frame, we're just kind of still slowly edging down. I mean, it's really not that bad at all. If you looked at, some sort of pattern like this, it still kind of looks like one of these wedges that tend to break out to the upside. Honestly, it'd probably be healthier for the market if we did that. I'm not saying we will. I don't even think we will. But if that's something that does end up happening, it may end up being healthier for the market anyway. Just something to point out. Whether you like it or not doesn't matter. The markets are going to do what the markets are going to do. And I think that's potentially meaning that we could be at a bit of a midterm market top right now, just given this, right? I mean, it kind of makes a little bit of sense. We've massively overshot our high previously. I don't know if this is massive. I mean, this does look like quite 11%. That's definitely massively overshooting our previous high, or at least moderately overshooting our previous high. Yeah, call this whole thing a deviation. The market comes back down. This was a liquidity grab. Everyone's calling for 30K. We don't even get to 25. Does it make sense? Yeah, kind of does. The thing is, we have a lot of support. If you take a look at things like the 4-hour Ichimoku cloud, look at our best friend. Our best friend has just turned up right here, giving us some support. If you don't know how this indicator works by now, I don't know how you've been watching this channel for so long. Go ahead and type this into the YouTube search bar and watch my free tutorial on how to get this indicator and how to use it. This is by far one of my favorite indicators. You don't hear me talking about very many, but you hear me talking about this one, and that is for a very good reason. So I love this indicator. Go check it out if it's something that you're interested in using. It's also part of my wider 𝐴𝐵𝐴𝐻 Academy courses, which you can get by following these steps on screen right here. Most of you that join VIP will be getting those courses for free, which is very, very cool indeed. And this is a very reliable indicator in my experience, just like the Fibonacci, although I'm not going to bother going back and proving to you why. Smash up the likes for that, legends. And one of the key things is, these top green lines and the bottom red lines right here generally tend to be the most reliable areas of support with our Ichimoku clouds, but the whole range can be quite useful as well. So a bounce off something like this would make a lot of sense, and momentum is in the same place as well. Take a look at this. Momentum has actually been very, very useful for Bitcoin lately. It is tightening up a little bit, but I still think that it's in a good place. I think that we have a good opportunity to be rising up from here. We are at the bottom. We could still have some, little drop to go from here, which is somewhat concerning. But at the same time, we've got our daily EMA support catching up as well. And that, I think, is something that's worth keeping in mind, when we have our daily EMA support catching up, that if we're able to hold on to this for a little bit, I mean, this might end up taking about a week from now, to be honest, but, if we do end up holding on for a little bit, and then we just kind of slip below, deviate, and then, perhaps come back into the range, that also makes a lot of sense. It would also turn this whole thing into a much longer consolidation play. Right now, the fact is that we're in an uptrend, or we still are in an uptrend. We challenged the high, we got rejected. We challenged the high again much more meaningfully, we got rejected. What we haven't done is we haven't challenged the low. And what's scary is that if we do come down and challenge the low, obviously that could just end up dragging us way lower. And again, just keeping in mind that we are in a bear market, these kind of things. This is what I want to be keeping in mind at a time like this. Everybody else can, keep their fucking excitement and stuff like that. I don't really care. I'm trying to be one of the sharks, one of the wolves that, to be honest, is not so tied to the outcome. I don't really care where the market goes. I mean, obviously, I want to see my Bitcoin investments go up and stuff like that. But ultimately, I'm a trader first and foremost. And so it doesn't matter if we go up or down, as long as I'm in a position to trade it. And these are the kind of things that I'd be watching for at a time like this. So my take is going to be, do we hold this support level? If we do, then yeah, I'm looking at potentially continuing this. I'm still going to expect a test of the low. I mean, if we don't get a low test and we kind of hit the highs again, then great. I don't think that's going to happen. I think now that we've been rejected very clearly twice from our highs, that we're probably going to have to come down, get a kiss down here at least, and then come back up at least, if not potentially come down for some deeper support. Any situation that Bitcoin plays from here is fine, in my opinion. I want to remind you guys that this isn't a sprint. This is more of a marathon, especially at times like this. We don't want to see the price go up too quickly. We want nice pullbacks. We have 𝐿𝐶𝐗𝐿 support on the daily developing. It is quite deep into February and March, but it's there. And so if we kind of slowly tumble down, do something a little bit like this, we're still going to have support down here. This could actually turn out to be quite useful for Bitcoin. Bit of a far cry for now. The Ichimoku cloud is very thin and therefore not very reliable in my opinion, but it's still something that I think is worth keeping in mind. So I'm going to be keeping an eye on stuff like this, and I'm going to be giving you updates on what I'm seeing here on this YouTube channel and inside of my Telegram channels right here with the links on screen. Definitely make sure that you take advantage of these huge bonuses on offer with Bybit right now. Again, up to $30,000 in bonuses, which is money that you can trade with, is a crazy, crazy offer. And since you've made it to the end of the video, there is something I want to announce. I'm going to be coming out with a dashboard for you guys, kind of similar to �MDX_Algo. He knows I'm doing this. I'm not ripping him off or anything. And I want to know if there are certain features that you want me to include. Some of the things that are not on �MDX_Algo. I can't speak. Some of the things that are not on �MDX_Algo's website that will be on mine include, for example, countdowns to Fed announcements, which, by the way, I think there's one like tomorrow or like the day after, which is very, very useful information. There's going to be, I forgot actually, I need to pull up my notes. There's a good amount of things that I want to include on there that isn't on like a standard crypto dashboard. And so really what I want from you, just to let me know in the comments, is what do you want in a dashboard? Like, I've got my 6 monitors right there, and I've got 5 price charts and then the dashboard up there. And I love Max. He's a fucking legend. I love his website. The website is cool. I've shouted it out many times. But I want to make something that is completely tailored to me and you guys. And I need to know... Oh, we're dipping a little bit as I speak, I think. And so I need to know, what else do you think should be included? Like, what would you want on the dashboard that you keep permanently printed? Let's say you've got an iPad that you just keep on your desk 24/7 plugged in, and you just want any information available to you that you think would be relevant to your trading at a glance. What would that information be? I want to include some on-chain analysis, for example, the Bitcoin daily transactions and so on. I want to include stuff like that, and I want your ideas as well. So you made it to the end of the video. It's not an announcement that I wanted to make super publicly. So congratulations if this is something that you think you'd be interested in, or if you want some more information about in any way, or if you're just excited for it, whatever, just let me know in the comments. That would be absolutely sick. Thank you all for making it to the end of this video. If you have, you know exactly what to do. Hit up the likes, subscribe, tick the bell, and I'll see you all in the next one. Cheers.